This is Michael with Trading Escapes. This is a weekly recap video for the week of December 3rd through December 7th, 2018. So this is our first week in a week in discipline. We've spent the past 5 months educating ourselves, trading in various different ways, just exposing ourselves to the markets, learning what we can, and basically conditioning ourselves for certain aspects of the market. The one aspect that we're and probably the most important, and once we're down a little bit down the path of consistent profits, we'll make some more videos concerning the overall process. But the one thing that really, and you hear people say this over and over again, that really gets missed is consistency, trading a plan, share size, working into it. It's one of those things where you see other people trading, and instead of writing down what you're going to trade, how you're going to trade, what the profit, the target, the loss, what your winning percentage has to be, you just start doing it. You take a trade here, you take a trade there. The problem is they got to line up. All those trades are components inside the plan, and if those components keep changing, you trade this type of trade and then you trade that type of trade. You never let the winners outrun the losers. And I think it's probably what happens to most traders as they come into this is they trade something and they get a win, and they trade it again and it's a loser. And when I say I'm speaking of a setup, an idea, definitely not a full-fledged plan, but an idea. They trade it again, it's a loser. Then they go, oh, you know what? I'm going to switch to something else. And they trade that the first time, it's a loser. And they go, oh, I'm going to trade something else, and that's a winner. And they get 2 winners. And then there's a loser, and they go, well, it's not it either. And they trade something else. And you can never take those components and put them in a plan to where you can measure it and figure out what ultimately you should be doing. Should I take another trade? Should I take 1 trade today, 2 trades today? How does it affect the ultimate outcome? So that's what the month of December, this is our 6th month. And when I started this, I had a goal that by month 6, regardless of how much, I wanted to see a consistent profit. So this week, which was a short week, Wednesday the market was closed, we ended up green. So we had a profit of approximately 300, I believe, which is fine. We're trading with 1,000 shares. I have the potential to times that by 10. So 300 could be 3,000. It could be more than that depending on what accounts I'm trading. So that's not what it's about. And many of you probably don't have, that type of money to get in. It's about the plan, and it's about consistency. And we're trading what I consider decent trades. We're looking at 30 cents a profit at least with the plan, or a 3-to-1 profit to loss ratio. So we're not scalping. We're not out there going, okay, look at the price action, get in, get out. That can certainly work. It works for lots of different people, but the thing to remember is they are trading a plan. They're doing it in certain ways that align. They take 1 trade, 2 trades, 3 trades. Those trades are managed, and the execution on those trades is similar, if not exactly the same. So they know how many losers they're going to have versus how many winners they need to outrun those losers. And it's another exercise of just understanding that losing on a trade isn't what it's about. It's about the plan and the execution and the management of that plan. So anyway, we're just going to go over the week. There's things we could have done a lot better. Today, I completely messed up the trade. It should have been a winner. We're going to go over the trades, maybe talk about some things that will tweak just slightly for next week. But again, the entire month is about trading this plan, so we're not going to drastically go change anything. So on Monday is what we're looking at right. This is Monday, December 3rd. we're looking at, you can see we took one trade. I think this is probably our best day, and it still could have been better. There's a couple components to this that could have been better. So as we see, we had a kind of a green to red move here in the morning, shot up, shot down, but we never hit our trigger to the downside. Sorry. Let's go back here. Take this trigger here. So we're just looking at our trigger point to the downside real quick. So you can see we never quite hit that trigger to the down. And of course, if we hit the trigger, we never had a good pullback. So the stock trend reversed on us and started pulling up. We realigned our bottom level. Trigger happens in this candle right here. And you can see it's a bit of a runner here. We have quite a bit of momentum going. Volume spikes a little bit. So we come up, pull back to the 9, and we get into the trade. As we can see, ultimately it ends up working. We do have a pullback to the 20, which would have been the better position. But at this point, this from an execution standpoint, I'm very happy with it. We ran past our trigger, we pulled back to the 9. Our entry can be at the 9 or the trigger. What we're finding out is usually if we have a pullback to the 9, if we take an entry at the trigger point, we'll usually end up in profit. Okay, so entry, we don't get stopped out. And probably the other point of this, the other thing we could have done better, or really the one thing we could have done better, the idea, here's our idea. What are we doing? We're looking at this stock, why it's a beta name. The idea is looking at range. What we're saying is if it moves 50 cents with a pullback, it's going to move another 30 cents. I don't care about direction. I don't care about anything else that's going on. And you just have to do this plan, execute this plan consistently over and over again. Okay, so we move our 50 cents from the bottom to the top. We hit our trigger. The trigger runs, pulls back to the 9. If a pullback happens to the 9, we're looking for an entry past the 9, at the 9, or even at the trigger again as it comes back. We execute that. Let's say our trigger was about 88. We get in at 86. Pulls back again. Of course, we hold. Management's in play, 86, so 76 right at this level. About VWAP would have been our stop on that. Pulls back, runs up. The one thing that we could have done better is manage the top end of this, because you can see we get out right here at 16. There is potential to pull more profit out of this for sure. So we should have brought up our stop, gave this thing a little breathing room to the upside, and just tightly managed it and see if we could have, maybe we could have got 33 cents, 35 cents, 40 cents. Obviously from 16, let's see, 26, there's another 10 cents, 36, there's another 20 cents, 46, there's another 30 cents, so the top of from here to here, we could have got another 30 cents out of that basically, and never came to threaten our 30 cent profit level. So if we can have managed this up a little bit and then set our stop back at our 30 cent profit level at 16 to protect it, we could have rode this up another 30 cents. Let's just say we get half of that, it was 15 cents. That's that's half of a normal winner for us. So that's the only thing different I think I would have done on Monday. Idea is what it is, right? Beta stock, look for it to run 50 cents, look for it to pull back. We executed all of that perfect. So idea, execution, 5 by 5. We're in a perfect situation. Where did we fall down? Management. We should have pulled an extra 10, 15, 30 cents out of this trade. So that was Monday. So we had a winner. That winner put us up 300 for the day, 300 on 1,000 shares. You've seen me trade AMD before. Normally, normally I'm trading probably about 6,000 shares on this. So, that is a in a normal size for me, that would be an $1,800 day. So perfect. I potentially look at trading this even with greater size after we get through November, after we get some consistent profits. That's when we'll start stepping it up. So that was Monday. Now we'll move on to Tuesday. So now we're coming to Tuesday. Tuesday was a little, I'm not going to say difficult. There wasn't anything difficult about it. Obviously idea stays the same. Beta stock name, looking for it to trigger over our run here, and then looking for execution, then looking for management. Now, the trades are the trades. Okay, mistake number one, execution. Chased into it. Okay, this is not a runner. The only time we take a trade as it's coming by our trigger point is when it's running. Running is 1, 2, maybe 3 candles cover this distance of range and just keep on breaking down. So we'll take an entry as it runs by at our trigger point with a stop at a trigger point. We don't let it pull back if it's a runner. So right there, mistake number one. I'm chasing it. It's obvious. This second trade actually is not a bad trade. I waited for it to pull back to the 9. I believe this is an EMA right here. I waited for it to pull back to the 9, and I took a second trade. The reason I took a second trade was the markets were closed on Wednesday, so I told myself I'll take 2 trades on Tuesday, whether that's a good idea or not. This third trade is actually not in the live trading video. This is actually a winner. And you know what that is? That's revenge trading. I lost on these 2 trades, was down 191, I believe, if we go back and look at the other video. And I just took a scalp right here. And, it worked out for me, but I shouldn't have taken it. It's a revenge trade. We took 2 trades. First one should not have been taken. Second one was fine. If we took a second trade on this, it should have been at the 20 EMA. So let's analyze this. Let's look at what we should have done, and we'll get rid of these trades here. We don't need to look at these. What should have we done? So this ended up being a losing day, and the first trade, and it probably was a losing day if we look at it like this. We come down, we trigger, we pull back up to the 9, okay, and then it runs down. So we take an entry at the 9. As it pulls up to the 9, we take an entry. As it pulls back down, and this may be an adjustment for next week, as we take that entry at the 9 or the trigger. So a lot of times what we see is if we hit the 9 and it starts pulling back away from the 9, taking an entry at the trigger is good. And the problem with this trade is it pulls back up to the 9, and then it pulls back down, and then it pulls back up to the 9. Probably a good indication that we should just cut it loose, flatten it for 0. But otherwise, it's a loss, and execution's fine, management's fine. We hit it here. I think we took that second trade we got in at 92, and 10-cent stop, pulled up, and we hit it right here as it hits the 20 EMA. Now let's say we hindsight being what it is, but let's say we were working on some management. We're working on some execution points here. Execution point number 1: we run down. We don't run down. We pull away from our trigger, pull back up to the 9, take a trade, pulls away from the 9, loses our trigger again, pulls back up. It's time to flatten. We shouldn't be seeing this right here. Pulls up to the 20. Okay, so this, in a perfect world, perfect management, execution's fine. Take the trade at the 9, take the trade between the 9 and the trigger. Perfect. Management-wise, I think we need to add a little piece of the management of, if it pulls back up to the 9, try to get out. Cut your losses. Wait for, it's a signal that it's probably going to pull back up to the 20. And if we would have waited for that trade on the 20, this is a tough one. because we're right at it. So if we had perfect execution, that thing comes up to the 20. We're watching our active trader. We see it. We get in, and pulls back down. Possibly could have got 30 cents out of it. I mean, it's to the penny. So if we got in at 23.01, it comes down to 22.71. So that possibly could have been a winner. We'll chalk this up to, it's a red day, right? Or a flat day. If we took this very first trade and, hopefully got out of it, no problems, it would have been a flat day. If we're trading two trades, possibly could have got our target profit out of this right here. The important thing to look at is the 9 and the 20. As we approach these, as we hit them, how we execute off of these and how we manage off of them. So that's Tuesday. So Monday, perfect example of a green day. Could have done a little something better. Tuesday, a little bit tougher, but this day perfectly executed and managed. This day should have been a flat or a winner. Instead, it was a double loser. We were down 2 trades on this. So as of Tuesday, I feel like we should have been up at least 1 trade, 2 trades. Instead, we were up 1 trade and with 2 losses taken away from it. So Wednesday again was closed. So the next trading day that we'll look at is Thursday. So that brings us into Thursday. Thursday was a winner. We were up 258 for the day. Took 3 trades, but execution was off. So idea, everything was good. You can see we took 3 trades and basically sort of scalping it up here. Let's clean this up and get the trades off, and let's look at what should have happened. The execution error here was, see this candle here? This is a clear runner. What do we do on runners? We get in as they break our trigger. So 20.55 there should have been a clear entry. We get out as they come back to our trigger. We don't let runners go negative. If a runner is going negative, that means it's pulling back. If it's pulling back, then we look at the 9 and 20 to see if we can't find a position to get into a trade. So if it's going negative, we cut, we flatten. This obviously is not that case. We did not have, as this candle pulled all the way up here. I mean, I don't that's like 40 cents in one candle. We should have had our order ready, and I did not have the order ready. So this candle ran up past the trigger point, so then I'm waiting for pullbacks. I get in, and it puts me in a little bit of a panic mode because my entry is way up here. That's not where I want to be. I want entry at trigger. Most of the time, I want entry way back here, but at the 9 and the 20. But I was okay with it because I did know it was a runner. So we ended up profitable, but it took us 3 trades and should have been 1. And the management on this should have been more. We should have got more out of this. So execution was the problem on Thursday. We should have been ready for this runner to run. We could have got in. We should have jumped right in here. Let's say at 20.55. 20.55. We see our target profit at 85. Okay, 85 right there. Now we can all clearly see what should have happened then. This should have been managed for more profit. We've got candle 1, 2, 3, then a strong candle up, hit our profit. We should have brought our stop up, gave that thing some breathing room, and tried to pull out. Let's see where it goes. 85, 95. There's 10 cents, 20 cents, 30 cents. 40 cents. That thing ran another 50 cents. So let's just say we should have managed this for another 20 cents. And if you can see 85 right here, once we get past that, once we push past it, we never come back to test it. So we could have brought up our stop to protect our 30 cents and let this run as long as we felt comfortable with it and taking profit. And let's say say we we cut it loose as it comes back here to 9, would have been acceptable. So Thursday, it was a green day. It could have been a better green day, quite frankly. So it should have been easier. We should have been in it, execution-wise. We should have been in here. Management-wise, we should have pulled more profit out of it. But again, you know, it's never going to be perfect. The system's never going to be perfect. But these recap videos hopefully are painting a clearer picture of, you know, we're up this week and we could have done way better. So that's Thursday. We'll move on to Friday, and which is today. Just finished up a couple minutes ago, and see what we could have done today. So Friday, so disappointing. I don't. Number one, the video didn't work. So I created the video, went to go edit it, get it up, pull it up, and the file was null. There wasn't any content in it. So I tried to make another video real quick just to test it, and something was wrong with the recording software, so I had to reboot. I made a recap video to replace the live trading video, but you know, it's just not as good. You know, I like to go back and watch these myself. So took one trade, and you won't believe what I did. So as the stock opens, I put the open right here, right? And it did a little dance here, and it pulled up and came back. Well, I had my range marked here and never readjusted for the pull-up. So my entry was right here, where my trigger point was at 80. So it triggered here, pulled up, and I got in at 83, and as you can see, it pulled back up even further and got stopped out at 93. So all in all, I mean, if this would have been accurate, it would have been a decent trade, I guess. You know, really, the more we're doing this, the more we're seeing if it's not a runner and it's not pulling back to the 9, or you don't take an entry at the 9, the 10-cent stop sometimes feels like it's in the wrong position. You know what I mean? Like if you take an entry at the 9 and it goes the direction, doesn't pull back up to the 9, then you're safe. But if it's anything less than the 9, especially in this time frame right here, it's a couple 1, 2, 3, 4 candles. It's a dangerous spot to be in. But let's do this. Let's readjust to where it should have been. All right. So this is execution. Execution was flawed. I did not have my range in the right place. If we look at the range here, you can clearly see, regardless of how I played this out, it would have been a winner. I could have taken an entry at the trigger. I'm never taking entries below, right? I could have taken an entry at the trigger, or as it pulls back up just slightly, wherever, 88, you know, our stop is 98, so it's up here. You know, how this trade should have played out: trigger to the 9, entry at the 9 or the trigger. Remember, if it hits the 9, but it's not, you know, it's not strong enough to pull back up to the 20, taking an entry at the trigger point is acceptable. Now you can see that level is 88. So 88, 58's our target. So 58, we hit 58 right here. So we hit 58 in this candle here. Not particularly a runner. I mean, it does jump back on us 2 cents or so. Could we have gotten more profit out of this? Possibly. You know, I think it's just a normal winner, right? I mean, we're not seeing huge runs to the downside here. You know, we do get a little volume spike on this candle, but it's an easy winner. And unfortunately today it's a red day. It should have been a one trade winner. Range, trigger, pull back to the 9, entry, profit. Should have been just that simple. I don't know what was going on with my execution on this. This was it was really a sad mistake. The only thing I could say is I kind of convinced myself as I came into the day, we've had 2 winning days where my percentage is where it needs to be. I think I was mentally trying to prepare myself for a loss, basically. And by doing so, I wasn't paying attention. I was like, oh, we can have a loss today and we're still where we need to be, instead of focusing on executing what I needed to execute. So, again, we are up. Well, let's do the calculation real quick. We're up $337 for the day. At normal size, that would be a little over $2,000. At size I really plan on trading this, it would have been, let's see here, what would we? It would have been a little over $5,000. So not a bad week, but Monday should have been a winner. Thursday should have been a winner. Friday should have been a winner. And quite frankly, Tuesday should have been flat, or if we took a second trade, a winner. So, that we basically, we're coming out with one winner, and we should have had three. This should have been a $10,000, $15,000 week at full size. We should be looking at a profit this week if we would have done things by the book, by the numbers, of $900 with 1,000 shares. If I'm trading 10 to 15,000 shares on this in various accounts, we're looking at $14,000, a $14,000 week. You got to consider what I'm talking about. You look at the trades we took. They're all video, of course, except for today. With the error that we had, there wasn't a whole lot of stress. The stress is, quite frankly, it's not the trade. It's not watching the trade happen. It's the plan. It's not trading again. It's, today I have a loser. There's a big piece of me that wants to take another trade, that wants to make up for it, that wants the revenge trade. But I don't need to, because the numbers will work out in my favor. The percentages will come together. I got to keep things realistic. Got to keep what the profit looks like realistic, to not go in and start revenge trading and looking at taking trades that shouldn't happen. Another thing to consider is some things we did. The things we did correct. We did come out. Our probability, our percentages for wins was positive. We are in the money, right? It's a green week. We took 8 trades for the week. 8 trades is perfect. I mean, for the last 5 months, I can't even tell you how many trades I've taken. I've probably traded more than most day traders would. They would just cringe. I'm looking at it. In the last 5 months, I've guaranteed I've taken more than 1,000 trades. So, that is crazy, insane. It's crazy that I'm still sitting here, that I survived 1,000 trades. It just goes to show you that, you can do it, and it's a mental game, and you need to prepare for it. So we took 8 trades this week. I think the numbers are 1 on Monday, 3 on Tuesday, 3 on Thursday, and 1 today. We have a green week. What I would have done different, we've come away with 1 green day, if you want to look at it that way, because we're up about 300. We should have had 3. I would expect that if we had done perfectly, we would have had 3 times what we had, and we would have taken half the trades. We would have taken 4, maybe 5 trades. We'd have taken 1 trade on Monday, maybe 2 trades on Tuesday, and then 1 trade on Thursday and 1 trade today. So that equals 4 or 5. But again, we're getting there. We're in the zone, and I think next week we just keep up with the same plan. We keep up with staying consistent, looking at the plan in general, the idea, the management, the execution. We've come up with some really good details this week to kind of adjust and maybe make some modifications. Again, next week, the goal is just to have two green days, and if we have 3 losing days, we're fine. We come out where we need to be. Maybe with our adjustments that we've noticed this week, it will help us. We'll have 3, 4. Hey, maybe we'll even have 5 winning days next week. But even if we have 1, we'll survive. So anyway, I hope you guys you've had a great week. I hope you're in the 10%. I hope you're green. Whatever you take away from this, great. It's a learning process. Like I said, my goal was by month 6 to consistently have a profit. Whether that profit is $10, $100, $15,000, $50,000, that's not important to me at this point. It's to take what I've learned in the last 5 months, apply it in some form or fashion as a plan of to control emotion. And I say you don't trade emotionless. You control emotion. You use emotion. I'm using my emotion to take these trades. I'm using emotion to stick with my plan. It's about how it's applied. It's not the absence of it. So, don't listen to these people who say you need to trade like a robot. People don't make decisions without emotion. It's a scientific fact. So go research it, go look it up. If you don't have confidence is emotion. Skill builds confidence. You don't trade because you have a skill. You trade because the skill has built confidence. Well, confidence is an emotion. It's not a tangible thing. It's not, it's subjective. It's an emotion that you use. So it's just about harnessing the correct emotions in the correct way. It's not about being a robot. You don't come in and go, oh, I'm going to do this. How did you create the plan to begin with? You didn't create the plan as a robot. You used emotion. You said, well, I think it's going to do this. It looks like it usually does this. Let me run the numbers. Let me look at the probability. Okay, I have the confidence to make this trade now. Without all that, without that confidence, without that emotion that you have, you'll just sit there and look at the screen all day long. And it's, sometimes that's the best place for you to be, is in a flat position, not in the trade, just looking and watching. My biggest advice to anybody who looks at doing this is you need to have a plan, and I'll put this together at some point, but 6 months sounds like a long time when it's day 1. It's flown by, and the things I know now compared to day 1, and I understand, in year 10, it's going to seem like I didn't know anything, but you really need to protect. Those first 6 months is about protection. It's about learning and protecting, because you can't take an account unless it doesn't mean anything to you. If you have a $500 account, or if you have a $50,000 account, and you can just, it doesn't mean anything to you, you can lose it. It's no problem. Then by all means, get in there and practice, because the best thing you can ever do, as far from an emotional skill set, is to get in and actually execute trades. At the beginning of this, 6 months ago, I couldn't, to think I'm just gonna let a losing day go by. I've got 95. I've lost $1,000. That was inconceivable to me. I couldn't, get heart palpitations and have chest pains going, oh my God, I lost $1,000 today. Without all that experience to build my emotional calluses up, I wouldn't be able to do what I'm doing now. I mean, we're looking at max loss days of $100 right now, but when we pull out and start going, full size on this, we're going to be more about a $1,500, max loss day. The thing is I can handle that now. I can handle, okay, it's a losing day, 2 losing days in a row. The winning day is coming. And, it's a matter of looking at the math and going and trusting it and trusting the plan. So anyway, that's the weekly wrap up. We had basically pulled out about $300. I think it should have been about 3 times that, according to what we just reviewed. We had about 8 trades. I think it should have been about half that, according to what we just reviewed. And we're going to do it all again next week. We're not, we're going to make minute adjustments. I'll keep going over stuff this weekend, looking at, what we could have, should have, and, make adjustments to execution and management, and just keep on going through this month. It's hopefully somebody who watches this, maybe only one person ever watches it, I don't know, but somebody who watches it and goes, just taking a month and trading a plan, the idea really is a dime a dozen, right? What am I doing? I'm going, if this stock moves X amount, I'm going to get in, right? You can come up with a billion different scenarios to say this is where my entry is going to be. I'm going to top ticket, bottom ticket, buy the dip, blah, 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 hits VWAP, bounce off the 50 EMA, doesn't make any difference. It's in the VWAP oversold bracket, undersold, RSI just hit, a reduced period RSI, whatever, doesn't make any difference. What makes a difference is you take that one idea and you don't deviate from it, and you extrapolate trades. You say, if I trade it once, twice, 3 times, 4 times with this execution and this management, this execution, this management, this execution, this management, this execution, this management, what kind of win can I get out of it, and what kind of loss do I have to put on it to manage it? Can I get a 3-to-1 ratio? Can I get 30 cents and risk 10? And if I can do that, what sort of win probability do I have to get money out of this? Do I need to be at 30% win rate, 40%, 50%, 60%, 70%? Let me go back and look at the chart. Does that look like it would work? That's exactly what I did here. Okay, had an idea, rewound the tape for a couple months, looked at it and said, wins there, wins there. When I went back and rewound the tape, I was looking at a 75% win rate. But in my head, I said, okay, 75%, realistically, can we get 50%? If I can get 50%, I'm at a 3-to-1 ratio. I'm looking 30-cent profit at a 10% risk. That's all we need. We'll do that all day long, until something changes, until the next idea comes along, right? Ideas, I've got lists and books full and notebooks full and whiteboards full of ideas on what to trade. Where it looks good, where it looks, negative, it's going to short, we're going to long, and the bulls, the bears, it breaks this level, dime a dozen. Look at the patterns, look at the consolidation, it's, where's the expansion? It's all about picking one thing, coming up with how you're going to execute it, and coming up with how you're going to manage it. And unfortunately, in this game, it takes you months and months and months to learn that. And most people fail before they ever get to that point. They're trying things, they're changing things, they won't stick to one thing. If we go next week and start trading a different idea, okay, we're gonna, every time it breaks VWAP, we're going to take, we're gonna consider that it's gonna bounce. It's gonna bounce off VWAP of this. Then it's not gonna work. And then the next week we trade a different idea. You have to trade the same idea for the numbers to play out. Now, at some point, that idea may break down, and you may need a new idea. That's fine. But if you're constantly switching all over the place, then if it works 40% of the time, what happens if when you first start trading it, you hit the 60%? And then you switch. Well, you just took all the losses and now you're switching. Well, what if you hit the 60% of your next idea? You just took all the losses. You never have the opportunity to have the gains. You never get a chance to have the gains. right? And of course, that's worst case scenario, but I think that's what happens to many people. It's happened to me in these last 5 months. You want to win every time, the holy grail of this, whatever. You just gotta, it takes you months upon months to realize that's not what you're doing here. That's not important. Forget about it. Anyway, I'm just rambling. You're looking at a blank screen here. Let me move it around for you, get you some excitement here. Wow, let's look at this. Okay, so Green Week, we're gonna wrap this up. It's been way too long. I've been rambling, and we'll be back at it Monday morning. If no ifs, we'll be back at it Monday morning, trading the same thing, do some minute little changes, probably to execution and management. We kind of had a couple that we could pull more profit out of. We had a couple that we had one that we should have been flat on. We had some entry issues, especially today. I feel sick about today. I mean, I don't care about losing money. I care about I didn't execute properly. I messed up execution. That's what I care about, and that's what you should care about. At the end of this, that's what you should start caring about. Anyway, hope you had a green week. Hope you're in the 10%. We'll talk to you on Monday.